Alright, this is going to be a weekly recap from December the 13th to the 17th, and that week was officially the first week in a while that I was actually able to trade OTCs again, because I switched brokers from Charles Schwab to Fidelity because Charles Schwab started charging commissions. And I'll be honest, it was a bit of a rough week because I wasn't just still going through that grind of not being able to trade my favorite setup, which is OTC morning panic bounce play, but on top of that, when I was finally able to trade on Fidelity, the setups were just not working, and I think it's because I had to just make a little bit of an adjustment on how I will approach morning panic bounce plays, and I went over it pretty clearly. I believe Thursday, if not on Friday, definitely Thursday, I believe, was the day that I did that, but I still managed to have 6 trades, and it looks like half of them were listed stocks and half of them were OTC setups. And I had a horrible winning percentage of those, just 33%, but I only traded 6 trades, and my average dollar position size was it looks like 100 and maybe 120 bucks. So I didn't trade very much. As you can see here, I traded this week just $700 of volume, which is nothing basically for any real day trader. That's nothing. I'm still starting small, and on top of that, I was trading originally with OTC morning panic bounce plays a $30 risk level, but now I went down to a 15 because I just didn't like how I wasn't able to really make money off of the morning panic bounce plays that did present themselves that week, and I think I'll stay there unless I can prove myself that I can be profitable trading the patterns well. And then once I have more confidence, I'll move it up to 30, and then God willing, if the setups keep working, if I keep doing well, I can move that to maybe 50, and slowly but surely be at a point where I can actually make like significant money just trading these patterns, not just learning a lot trading morning panic bounce play setups, but also making more money too, to the point that it actually matters. But even though it was a red week, I mean, it was just $1.51. The last red week was $6. I have more green weeks than red weeks, and most of the time my green weeks are larger than my red weeks. Of course, there are some exceptions, but for the most part, I do that. Let's go ahead and go over these setups. Again, just to summarize, it was just me trying listed stock setups, which I'm not that interested in compared to OTC morning panic bounce plays, but I did gain some experience there, and it was actually a good setup, especially the last day right here with Rivian, and the rest were just OTC setups that didn't really work out, but I can go over it, and as well as how I'm gonna probably at least hopefully be more profitable trading them with the way I'm gonna start approaching them differently. Let's look at the first setup, which is a high a day breakouts setup that did work, but I put myself a no, as in how did I trade it? Did I trade it well personally? I believe that's a no, or no, actually yes, it was right here. This section right here, did the setup work? This setup, this section right here, did I trade the setup well? And this section right here is, did I trade according to my dollar risk level? So $4 is my dollar risk level for listed stocks. Let's look at BLU for a high day breakout for the 13th. Okay, so it was this nice day, not necessarily too crazy in terms of a long-term chart, but it does show a nice breakout gap up day. Sometimes you see some random listed stock just have a gap up and it doesn't actually do anything. This one probably gapped up because of news perhaps, and then it just offered some nice volatility to trade. And I was probably going for something that had a breakout over the day high on top of this, as you can say, breakout day over this range, this gap up. A lot of volatility and opportunity to be trading a nice setup there. I was in at 947, 837. So let's probably just zoom in right here to bring it a bit closer. 947 was right here. This candle right here, this red one, and I was in at, what was it? 837, 947. That does not make sense. How was I in at 837 at 947? And that is the right day, the 14th? The 13th. Ha! I knew something was off. Right here, the 13th. I'm not going to cut that out. This was the day that I traded it. And I'm going to zoom it in a bit closer. I didn't necessarily move too much from this range right here. That's going to be the level right there where it cuts off. Okay. 947 was right here. That makes a lot more sense than I was in at 837. This was my entry. So what was my idea here? I like how it had the move here, the nice gap up on the daily chart and everything. And I wanted it to have like a little bit of a dip when it was around this range to get in full size, but it was starting to uptrend and look really nice. And I was afraid, you know, this thing just broke the day high right here. It's in this range right here, and it's not going to have another dip. Instead, what I'm afraid of is that it's actually going to keep uptrending, but I didn't want to be in the setup full size and then it has a dip, and then that feels dumb, or maybe, you know, it just doesn't absolutely, you know, work out at all, and then I'm in the setup here and then it just keeps downtrending and doesn't just dip, but it keeps, you know, failing, or maybe it consolidates or it just sells off the rest of the day. So what I decided to do here was to just go in half my size, which is why my dollar risk level was calculated at $2 when I normally do $4, because of the fact that I was only in just a tiny amount, you know, because I was only half sized. In theory, I was in half sized here. If it's going to downtrend and make that higher low off of this range that I want, I can get in the last two shares, and then the setup can go forward from there. Or you know, it can just uptrend, which is what it did here, to a new level, and I'm at least in a position size to be a part of that. So that was the idea there, and it looks like I sold at 842. Let me get rid of the extra zeros. 842, and that was 949. So let's look at 949 right here. 949, 842. Yeah, a pretty bad sell right here, and I was in at 947. I mean, and then I kind of sold right here. And the problem was is that my emotions just got the most of me. It's a listed stock setup, and you know, I was just shaky, you know, in something that could be a nice breakout that keeps going, or just something that has a sharp reversal. So I was pretty scared. And I think what I learned from this setup is, I think I wrote it some here. Yeah, I wrote it right here. I was half sized, otherwise good attempt. The idea with this one right here was a little micro lesson that I made for myself. If I'm in a setup where I'm half sized in this type of scenario, or maybe something similar, you know, instead of letting my emotions get to me, and I sold 2 minutes later when it offered an even nicer move towards the nines, and you know, I was in, you know, right here in the 830s, right? What I'm gonna do now is, if I'm gonna be half sized, I might as well risk my risk level. So if it breaks my risk level and I cut losses quickly, it's not even going to be that much of a loss. It's going to be half of what I would probably, you know, have lost if I was full size. But I'm not full sized because it's a speculative trade, a speculative area that I'm entering. So that was the idea there, and I believe my risk level was VWAP. Okay, yeah, VWAP at breakout level. So I was in it right here, right at 947, and I was risking this level breaking, because at that point it's not, you know, something I want to be a part of. I would think the pattern is broken if it does something like that. And yeah, so what happened was, again, I sold 2 minutes later, not even at a decent price, and I missed out, you know, from this opportunity to sell into the $9 level. But you know, if I'm only in half of my position size, I might as well actually risk my risk level, which was VWAP, and then, you know, if that breaks and it fails, well, at least I put myself in an opportunity to be profitable. And then, you know, if I were to take this trade again, I would have held, because I would have a clear risk level in mind, a clear level to get out, and not be shaky from all this emotional, you know, price action that was happening back here. So I think that's a good lesson with that one. And let's look at the next trade. It looks like I traded BLU again the same day, an inverse head and shoulders. This setup did not work out. and I considered myself trading it okay. Make sure to be completely closed out. I remember that, and I did trade it pretty close to my dollar risk level, which was fine. I only lost $1.35, small size, because I'm trading a $4 risk level. Let's look at BLU at 1044. So does that cover it? Yep, right here. Okay, my entry was 1044, 903. So let's look at 1044. Right here, 1044, 903, give or take right here. So what was I looking at? I was looking at inverse head and shoulders. Here's a shoulder, head, and then here ideally could be the range where it makes a shoulder and a nice uptrend. As you can see, it broke the level, but it then did the move, but it wasn't where I was interested in it. And you know, this is more like something where here's the shoulder and here's the head, and then it just has a really large spike, and then a failed shoulder attempt here, a failed one here. Then it, at this point, it just gets too long, and then eventually was a move, but then it didn't really offer that much range. I mean, it went from $8.68 to $9, and then I guess the second higher low. This one kind of died off, but that was the idea there. Shoulder, head, shoulder. It didn't work out, and I cut it eventually at 1054. My average, which means I had more than one sell position, was 876. So let's look at 1054, 876. Wow, did I really wait till 1054? Jeez. Oh, I remember why. 1054, 876. This is when I completely got out of the position, right? But what happened was that I was actually trying to get out here, everything, but I didn't actually get out all of my shares. I still had 2 shares left, and when I found out at 1054, I closed those 2 shares. The issue was that with this inverse head and shoulder, shoulder head shoulder, I had originally 5 shares, and what happened was that when it was in this range, I remember I put a 2-share sell order at a higher range in case it were to go and spike to that level, and then I would have my order executed. But what happened was that it never got to that level. It downtrended. I had to cut the trade, but because I had that open 2-share order, I didn't actually, you know, close out completely. I still had 2 shares left, and that was my issue there. What I should have done is made sure I was out all of my position, which is why I put a no, as in how did I not a no, an okay, as in how did I trade it, because I at least had the right mindset. It's not like I just sat on the position thinking, okay, I'm at the level, I didn't cut, is this thing gonna hold? Sure, it held, but that's not how I trade. I just didn't get out of the position because I didn't see that I was still in the position. That's all I can see here with that one. That was a good lesson there, just to make sure you're completely out of your trade whenever you close it, in case something like that happens. Let's look at the first OTC trade in a very long while. LKNCY. Morning panic bounce play. Let's look at LKNCY for the 15th. Yeah, not a very impressive daily chart, actually. The only thing kind of nice is that it kind of started to play off of this level, but I was probably just very ready to get in the OTC trade. And even though it wasn't the best looking thing, I got in it anyway, because this is a bit of a higher price OTC. They don't really work that nice, but this is when I started to really, I believe the next day, change the way I consider trading them, if not this day. But let's look at some morning panic bounce plays that did work out, but not necessarily when I traded it. Again, trading it like the way before I made some adjustments, but I don't want to go over what I started to do differently with morning panic bounce plays, because I don't want to drag the zone and make this too long and crazy. You can just watch the video I made on the Friday, I believe, and I go over it in detail. But let's, again, with the old mindset, see how I was in these setups, not at the very bottom where it turned around. I was in at an average of 1041, 948. So let's look at 948. Right here, 948, 1041. So I was in it right here. It looked like this was going to be the bottom for me, but you know, it kept failing. It failed here ultimately, but it did make that bottom at this 1020-ish level, and it did get from 1020 to 1047. Again, not the best range, especially because it's a higher priced OTC and those don't tend to work that well, but it did offer some kind of a move. It did offer a higher low, and then it did break VWAP, so it went from 1030 to 1060. The only good thing about this is that you can trade a lot more dollar volume. I believe you can just trade a larger size, but yeah, I was in it again right here. It didn't work out at 948, and I was out 950, 1039. Right here, 950, 1039 was my average. So I remembered this trade. I think I had 2 exits. I sold one here at like 10, I think it was 1040, 40 something, I forgot. But I remember selling some because it just had a big spike. And this one does not have VWAP the way E-Trade has it, but at least at the time when I traded it, I think VWAP was much closer. Let me see if I still have it. Actually still have it. As you can see here, I have recorded my entries in it, so let me zoom in out a little. I was in it right here. You see VWAP was a bit closer, maybe not as close as I remembered it. I remembered it being closer, but I was in it, and then I sold some of it here because of the spike it had. Just seems kind of off, and I remember the VWAP being much closer to it, if not right at it. So that's why I was very inclined to sell there. But you know, sometimes VWAP changes after you reload the chart and it moves somewhere else. But I was in it here. I sold, I think, most of my position, if not about half, and then I sold the rest when it cut the support level that I was playing off of right here, and I got out there for a slight loss, which was fine. And yeah, that was a trade there. It did again ultimately play out, but that was me trading it the old style. Let's look at the next trade. KYNC, morning panic bounce play higher low. Okay, yeah, wrong size. So in theory, with morning panic bounce play setups, I trade a $15 position, not position, but dollar risk level. But anything else OTC related, I trade in theory an $8 risk level, and this one calculated wrong. It was my fault because of the way I'm trading right now, where I calculate my dollar risk level on the Schwab trading platform, and then I put how many shares I need to trade on Fidelity, which is what I actually use to trade. And what happened was that instead of putting 10,000 shares, I put 1,000 shares, and I was following the dollar risk level. Oh right, that's right, it's not $8, it's $4, because before it was 15 and 30, and now I'm trading 15 and 8, which is about half. Right? I'm actually completely confused. Let me just take a look, because that is a really small, because even if I were to have traded 10,000 shares here, it should have been $4, not $8. So let me just take a look. Alright, I am back. It is 11:13, and I believe I traded, at least in theory, I was going to trade just a $4 risk level, which is stupid low, instead of 8, just because it was the same day I was trading a new platform, and I just went too small. Even if I were to have done 10,000 shares, in theory, I should have traded 20,000 shares, but I guess that worked out in favor, you know, because it wasn't a setup that worked out. But let's go ahead and go over it. It was just a morning panic bounce play lower low setup with KYNC. So let's look at KYNC for, what is it, the 15th? Yep, 15th. Right here was my entry and exit. Just this day right here, somewhat of a nice run up, but you know, it's really not too nice in terms of what it's been doing the past few months. But if you just zoom in here, I mean, a move from, you know, sub penny level 4 to 1 penny is actually pretty significant in terms of percentage. Let's go ahead and go over the 15th right here, and yeah, let's go over the setup. My entry was at 10:03 a.m. 104, so 10:03 Right here was my entry, 104. So my entry was right here. In theory, a morning panic bounce play. Kind of had like this panic here, right? So morning panic bounce play, bottoms, spikes, and then it makes a lower low. It's lower than the morning panic bottom here, so that's why it's called a morning panic, bounce play lower low setup. So I was in it right here. As you can see, I didn't get the bottom. It had one more downtrend, a little bit of a baby one here, but it had one more actual downtrend. Just look at the volume before it actually made a nice move from sub penny 95 level to as high as 1.2 pennies, which is pretty big in terms of percent gain. But I didn't get to nail it. I just nailed this level. This was a level that played out. It even broke past VWAP, put a little bit of a high low, although a bit sketchy with this candle right there. And that was the move. My entry was there and my exit 1007, 101. 1007 was the red candle here. I got out 101. Cut losses quickly. I'm in the setup right here. It just didn't work out. It had one more leg down. I was risking this little wick right here breaking, so when it broke it at 1007, I got out immediately. If I was a hard-headed idiot, I would have bag held this for just a few more minutes before I freak out because it's in sub penny level, and then I'd be extra pissed with this setup because I didn't cut the trade immediately, and then I sold at the very bottom before I had a nice bounce. At least I was on the right track. It just didn't work out here when I traded it. I could have done it again here, but sometimes it just feels a bit degenerate to say, alright, this is the actual bottom, and then I trade that, and then it makes a lower low. So this one did work out. Again, I just didn't get the actual bottom. Maybe I should just be a little more patient, maybe wait for large volume, but this is one of the few examples where you can do everything you can, and you're just not in at the level where it plays off and makes a nice move, but at least I was on the right track. Let's look at the next one, ICOA. I really don't like this stock. The way it trades, it's kind of, I don't like it. It reminds me of DPLS. I really don't like it. Let's look at ICOA morning panic bounce play for the 16th. Right here is the 16th. So again, very similar to KYNC, that it has a bit of a nice run up, but when you look recently, it's nice, but when you look very far away, it doesn't look that nice. But that was a setup I traded there. Maybe I should just wait for an actual nice running OTC stock that is near its all-time highs, not like one that's already played out and now it's having these little baby bounces. So let's look at ICOA, and I think, yeah, I didn't do it right here. Let me get the chart for the 16th, which is right here. My entry was 933 at 1145. Let me just zoom in from the top. As you can see, it kind of downtrended afterwards. 933, 1145. So right here, I actually had a pretty good entry. One of the very rare examples where I'm in at the same level that I'm risking. So it has that little downtrend here. Nothing too crazy, honestly. It's a little bit of a degenerate setup, but I'm in at the very bottom, which is the bottom of the panic, at least at the time when I was in the setup. So again, not very common that something like that happens. I normally get something nice, decent, close to the bottom, but not the exact bottom like I did right here. But I was in it right there at 933. And as you can see, trading according to how I traded the old way, morning panic bounce plays. This candle breaks it, immediately makes a nice move afterwards to, I guess, 1.25 pennies. So the range isn't horrible. It could be better, but it could be worse. And then it did like a double bottom thing right there, and it got to 13, which really threw me off. I didn't like the way the stock was trading, and again, my exit was at next minute out at 11.3. So I was in at 11.4, I guess 11.4 and a half, and I was out 11.3 the next minute, because again, I was trading that way according to my dollar risk level, the way I was trading it the old way. But yeah, the new way, I'm not gonna, just to briefly go over it because I don't want to make it long. I'm going to see it trade a support level, play off a certain level, and I want to see it break it. And depending on how it breaks it, if it does like a break and then it looks like the bid is stacking and it's going to reverse, I'm in the setup, and then I'll get out of whatever the bottom is of that candle if the setup fails. Or maybe it breaks the support level and it looks like it's going to keep downtrending and it's going to make a new range, and then I start all over with that same idea in mind. And yeah, that was a setup there. That one really got me thinking as to how to trade OTC morning panic bounce plays more profitably, and I look forward to trying that, God willing. Let's look at the last trade, which actually was great because I finished the day on a pretty good note. I could have done better, but I really liked this trade here. Let's look at RAVN for the 17th. This is a listed stock, no more OTCs. This one has not traded very much, but in theory, and it doesn't really show that nicely on this platform, how it broke like the all-time low since it had its initial IPO right here. Pretty red day, but it offered a lot of nice volatility, and I got to take a piece of it, but there was a lot of room for profitability and multiple setups. I traded an inverse head and shoulders. Let's look at 1022 at 93.31. Right here, 1022, 93.31 was my entry. So what was the idea? Shoulder, head, shoulder. I was initially interested in being short this setup. And yeah, no, definitely. If you want to see the video where I go over the trade live, just look at the one on Friday. And if you want to see how I trade OTC setups differently, I believe that was definitely on Thursday. I think that's the final take. I'm pretty sure I got that right. Shoulder, head, shoulder. I didn't want to be short, down under VWAP. I wanted it to do some kind of spike so that it could play off of previous support levels, which doesn't really show too nicely here on Schwab, but on E-Trade, especially if you watch that video, I go over it pretty nicely how this was like a resistance level, and what I wanted it to do was to see it do some kind of a short squeeze, a short into. And as you can see, the top right here, which I hesitated shorting, this thing was easily shortable at Schwab, played it right under that $100 level, which was resistance right here, and this offered a very nice downtrend. I even called the very bottom of this move right here, the short setup, and where I would have covered it if I still had any shares left before I did a bit of a squeeze. So again, I was in at this level 1022, and I sold my last position at 1027, 94.03 right here. 1027, 93, what was it? 94.03, I believe. That was my average, right? 1027, my average was 94.03. So that means that 1027, I did sell some higher, but out of all of my sells, it averaged out to be that 94.03 level. And honestly, I traded it all right. I was on the right setup and everything. I just really underestimated how much movement this thing was going to have towards the upside. When the stock has a really nasty red day, a panic, a downtrend, a breaks an important level on the daily chart, and when it's down so much, it's not looking pretty. It's actually kind of impressive that this thing actually not just got to VWAP, but it broke significantly past it as well. And I was just underestimated in terms of how much move towards the upside this thing had. But I did trade it there. I had everything right. I just probably could have maybe have sold a bit better, but for what it was, and given how I've traded some of these and seen some of these play out, I'm actually very happy with my trade completely. And I'll just open up to the idea that maybe a setup like this in the future can offer something nice as well. This one did offer that short position here that I hesitated on. I didn't even try to short the lower high, which I could have done as well, and that was another nice move towards the bottom. And then we had another shoulder, head, shoulder, very similar here, shoulder, head, shoulder, shoulder, head, shoulder. Even the right positioning in terms of the left shoulder being much higher than the right shoulder, right? And then the head kind of being like a actually I was gonna say the head looks very similar, but this was the head right here and the shoulder, and I would say both of these dips count as the head here, but very similar, very, very similar. It's crazy how when some stocks have this crazy emotion and volatility, how it makes such clean patterns sometimes. That's really all I have for this week. I was really happy with that setup I had here, even though I could have traded it so many more different ways. I could have went long in this inverse head and shoulders, and I definitely could have been short here. And if I was an expert, I probably would have maybe have been short since it like broke the level for the first time. But that probably would be a bit too much for me. I'm really happy with how I ended the week, and even though it was a red week, again, I barely lost anything, and I didn't trade a lot of dollar volume too, so I think that's a good way to follow just regular trading. And I look forward to potentially being able to trade OTC setups with that new mindset, the new approach I'm going to take. And let's see if we have any setups. If not, that's totally fine. But yeah, pretty happy and thankful to God for the lessons. Even though I just lost a buck, it's nothing. I still learned a lot. Well worth the $1.51.